Hello, I am Natalie Cook. I am the CEO and founder of Finance Fight Club. We help business owners understand their financials so they can do cool things with their business. Sometimes they are looking to sell, sometimes they are just trying to pivot or buy another company or pay themselves well. But primarily, we are here to make your financials look nice and tidy and clean and help you think through forward looking strategy. Can I hire? Can I fire? I mean, you can always fire someone. Can I invest in this equipment or this building, or should I expand or not expand? Those are the questions that we are here to answer. Today, I want to talk to you about bookkeeping because bookkeeping is kind of the basic foundations of your financial team. It's something that all business owners need. You require it. You have to have it. You don't have to have it the same way as everybody else, but you have to have it. It can be confusing as to what a bookkeeper does, what a CFO does, and all of that. We have other videos on those distinctions, but today I just want to dive into bookkeeping specifically, primarily because it's come up a lot. I've had a lot of calls around bookkeeping. We've had a lot of new clients come in and we've assessed their bookkeeping. And then recently we just had a client get acquired and we said goodbye to that bookkeeping team. I mean, we work with them on other clients, but it was kind of a sad thing. So I was like, bookkeeping is on my mind today. So that's what I want to talk to you about. So let's dive in there. All right, so let's define bookkeeping and what that is. So for some, I think people think that's data entry. It's a little bit more than data entry. And bookkeeping spans, like sometimes people say, hi, I'm a bookkeeper, but they're really doing like much more controller work, or they're doing payroll, or they're doing accounts payable, accounts receivable, or they're maybe paying your state taxes. I would say that like bookkeeping firms in general might cover that, but let's just talk about specifically bookkeeping and what might you need for your business. So the bare minimum, bookkeeping is trying to create financial statements via the data of what's flowing in and out of your business. That's the simple term. It's a little bit more in depth than that. If you were thinking through, hey, I want to hire someone to do my QuickBooks and do my bookkeeping, what are they actually doing in my QuickBooks? And that's not the only software that you can use, but it's a pretty prominent one. Ideally, in an ideal scenario, you have your bank accounts hook up to QuickBooks, and QuickBooks is pulling in all those transactions. So you've separated your business and personal, you've got your business accounts hooked up to your QuickBooks, and you can go in and you can look at all the transactions. What a bookkeeper is going to do is categorize those into a chart of accounts. The chart of accounts is what's going to create your balance sheet and your profit and loss. And then at the end of the month, they're going to reconcile to your bank statements. And so sometimes I think people think that's just clicking buttons in QuickBooks and then it's cleared and you're like, oh, great. But really what they're doing is making sure that the cash that it says that you spent matches your bank statements. And a lot of bookkeeping softwares do this now, and it's kind of automated. But a good bookkeeper is going to make sure those are reconciled every month. What I see a lot of when we take over clients and we assess their bookkeeping is that sometimes if they've had someone doing their bookkeeping that isn't a trained bookkeeper, which there's fabulous bookkeepers out there that are self-trained. So this is not to knock that. That's not the case. They might have just been doing that categorizing of transactions, and that will create a decent profit and loss statement, but they're not reconciling to the bank statements, which is messing up the balance sheet. So those things are really important. You have to make sure that someone is reconciling those accounts. And that is a technical term to mean that they're saying, hey, yes, these transactions that came through the bank all match and they make sense. Nothing, if you need to exclude a transaction because it's personal or you need to reimburse, they're doing that and then it's tracking to that bank statement. Or let's say you actually manage physical cash in your business, they're also making sure that physical cash matches. So let's just say the beginning of the month you had $2,000 in cash, and the end of the month you had $4,000 of cash. They're making sure that all of that money flows where it says it's going to flow. Basically, like making sure you didn't get stolen from or you didn't put money in or less money is going out. Like those things are really important to understand. Bookkeeping is kind of that bare minimum financial support that you need. And you need someone who is going to reconcile to the bank statements and look at the balance sheet. Now, the other things they should be doing, in addition to just categorizing and reconciling, is making sure that at the end of the month, your balance sheet is accurate. This is where we see whether you have a good bookkeeper, a great bookkeeper, a medium bookkeeper, or someone we need to get replaced. Those balance sheets are the most important financial statement from a finance perspective. Profit and losses are, I would say, second important, and then cash flows are third. And there's a good reason for that. But the balance sheet, to me, is the best indicator of whether or not you have good bookkeeping, because the balance sheet tells a pretty distinct story. So on a balance sheet, you've got your cash assets, you've got your current assets, you've got your fixed assets, which can be long-term assets. And then you've got your liabilities, which are your debts, things that you owe. Those can be your taxes that you have to pay. Those can be your credit cards. Those can be your long-term loans or short-term loans. And then you've got your equity. Good bookkeepers are going to take all your loans and you're going to pay them off every month, and it's going to draw down that balance. They're also going to look at all your fixed assets, and they're going to have schedules with all of those fixed assets. Now, a lot of businesses, you don't need to have monthly depreciation. That can get really confusing. They're doing it at the end of the year, so it may not change throughout the year. That's totally fine if that's the way that you've set up your business. But there are lots of reasons why you wouldn't want that if you are a bigger company, if you're trying to be GAAP compliant, if you're trying to raise funds, or you're growing, exponentially. You want those things to be ticked and tied every month. And then there's reasons why you wouldn't depreciate something or you would depreciate something. And all of those are different depending on whether we're focused on tax liability or internal cash flow or making your margins look better prior to sale. So all of those things are actually very strategic on how your bookkeeping is done. And I would say that most people, when they have really good bookkeepers, the bookkeepers are helping think through, okay, I'm going to categorize it this way. They're not helping with your financial strategy per se, but they are helping you build that financial foundation in a way that makes sense for your goals. And they're asking the right questions on like, okay, are we depreciating because of taxes, or are we depreciating because of something else? And we need it to be monthly or annual or all those things. So those are things to kind of think through. The other thing where I look on the balance sheet to say like, yes, no, good, where's our bookkeeping in the scale of quality, are anything that's negative on the balance sheet that the bookkeeper can't answer as to why. So sometimes things are negative, like liability to Washington State. We just don't know the history of the account. So it's not like anything's wrong. We're tracking it. We know it's tracked, but it's low priority. So we're like, yeah, we can leave it. We'll clear it at the end of the year. And so we're tracking down the data to kind of figure that out. And our team is helping kind of oversee like what has to happen there. It's a low priority. It's really administrative things, but if we were to sell the business, we'd have to answer what that was, and we can just leave it open. You can't just have those things open. Specifically, if you're going to go sell or acquire or get financing or all those things, those need to be ticked and tied and have a story behind them. And so those are things that can really cause problems. The other things that can cause issues are just putting in property. So I've seen property be categorized as a liability because they thought, well, there's a loan against it. Well, the property still needs to be categorized as an asset, and then the loan against it needs to be categorized as a liability, and it'll offset. That's the whole point of a balance sheet, is they offset. Those are things where, yeah, you don't know. You can't tell the health of your company because you're not putting them in the right spot. So kind of to recap, that balance sheet to me is the biggest indicator of the quality or the level of service you're getting from your bookkeeper. If they are not at all looking at the balance sheet, if we go in and we look at QuickBooks and we're like, wow, nothing's been reconciled, it's like an automatic, I'm sorry, but we have to move on from this bookkeeper. I don't mess around with that because I can't do my job well without good data. Now, data is never perfect. And I would say a good CFO can kind of manage in that space, but at some point you're overseeing this process, and the process and the data clarity has to be there. We also know that some things are just messy, and we're going to make a certain call on what we're going to do with those things as they come up. So what does your bookkeeper do? We talked about categorizing, reconciling, managing the balance sheet. What else are they going to do? Maybe provide your financial statements once a month, but that's kind of it. Like, unless, depends on the level of service of what you have with that particular firm or your outsourced bookkeeper or insourced bookkeeper. That's what bookkeeping is. Now, again, like I said at the beginning, bookkeepers as a firm can provide lots of different things, but that's the bookkeeping function. And it's more than just data entry. There's some thought that has to go into it. And again, like, I'm not a bookkeeper. I don't run a bookkeeping firm. I'm not worried about the titles. I'm like, hey, I need financial statements that are good at the end of the month. That's what I'm looking for as a fractional CFO. And that's what we're looking for our clients. Now, we know the process and we know the different things. There's sometimes that things that lag. So maybe you look for 90% accuracy or 95% accuracy. And if some things lag, that's okay. But that's what you want. Now let's talk about what other things that you might be getting from a bookkeeper and what those mean and don't mean, and could you get them somewhere else, and what does that look like? So let's talk about accounts payable and accounts receivable. So sometimes you want to bring that in-house. If your invoicing is really complicated and it needs to be done a certain way, like you're doing volume-based invoicing, I think those are good things to consider hiring in-house at some point, because they're really nuanced and they're hard, and you want someone with all the history to stay. And not bookkeepers that do data entry don't always necessarily do invoicing. Not that they can't do it. They're just different skill sets. Like you might think, oh, it's all admin work and it's all fine. There's still different skill sets. There are different levels of tracking and all of those things. So I think that a lot of times business owners get frustrated because they expect the bookkeeper to be able to do all these little things. Bookkeeping is a different thing than APAR. Some people can manage all of those things and some people just aren't going to. And so it's okay to have different people doing different things. The other one is payroll. So not all bookkeepers run payroll. Payroll is actually very complicated. I personally mess up payroll for my business all the time. I run my own payroll. I should not run my own payroll, but I like owning it. And I will say that there's just like so much nuance to payroll, especially in the world of remotely run companies and all the different states. So payroll also involves a huge amount of compliance. And depending on how many employees you have, I wouldn't necessarily lump bookkeeping, APAR, and payroll all under one umbrella. Now, it might be the company can offer all those things, but there's different people doing it because they're different skill sets. And so that's where I'm going with it, is like, I don't care if you reach out to a firm and they're like, we cover all of this. If they're good at all the things, then use them. But I do think that those are different things that you're looking for. Also, payroll is done by lots of different systems and different things, and they all have to hook up. And the bookkeepers should know how to classify all the payrolls when it comes through on the transactions, but they might not know all the nuance on payroll, because payroll is like, what are they paying? What's getting deducted and how are the deductions set up and how are all these things set up? So there's just a lot more things that go into payroll. I would never want to run payroll. And obviously, as you can tell, if you run payroll and I'm talking, you're like, she doesn't know what she's talking about, because I don't. I'm like, someone else is doing payroll. I want to see some totals, like by department, by employee. That's about it. I don't really care about the rest. I'm like, the rest is somebody else's position. I'm not here to kind of figure that out. It's a pain. Payroll is hard, especially in the remote world we live in. It's really tricky. I think it's a lot easier to run like a local business when it comes to payroll. I don't think it's necessarily easy to run a local business, but when you're just dealing with payroll and everybody is local and it's one thing, it's so much cleaner, because you're like, oh, minimum wage went up for everybody. But if you think about that, and you have employees in varying states and they have state laws and all these things, that's the complexity of payroll. Your bookkeeper may not understand that and may not be the person to ask those questions to. And that's kind of the whole point of this video, is that a bookkeeping is a role, APAR is a role, payroll is a role. Now let's talk about taxes. So this is the other one that gets really confusing. I still sometimes get confused on it, because typically people will say, oh, I need a CPA. Well, CPA is a license. There's lots of good bookkeepers that have CPA licenses and that don't do taxes. But there's also a lot of bookkeeping firms that do state taxes, or nexus, which is sales tax, like multi-state sales tax and excise tax and other local taxes. Like, let's say I do a bunch of work in Colorado. I have to pay the state of Colorado some money, even though I didn't sit in Colorado. There are plenty of bookkeepers that will help manage that. That may not be the person doing your bookkeeping. It might be somebody else internal that's looking at that compliance. So they might offer it as a service, but it's not always the same thing. So sometimes when people get big enough and they're like, I'm going to hire in person, they're going to expect one person to do all of these things. Those are different skill sets. Now, one person could do it. I'm not saying they couldn't, but I'm just trying to like enlighten you specifically on that. They are kind of different functions, and there's different nuance. I would not really want to run cross-state compliance. It's kind of a pain. We do it. We do checks. We don't actually do the filings, but we do make sure that people are compliant in their businesses, especially for professional services that are running in various states. It's nuanced for sure. with bookkeeping, specifically on tax, is your bookkeeper they're not necessarily doing your taxes. And then tax in general is complicated because you have state, local, and federal. And so primarily when people come and they say, hey, I need a CPA, they're talking about federal taxes. Your bookkeeper might be doing some of your state taxes, or they're talking about income tax on your personal income or your business income. So just know that when you are looking to build your financial foundation, worry less about title and the actual task that you need completed and go from there. Like that's how we build the financial foundation for our clients, is like, hey, you need someone to categorize transactions and reconcile bank accounts and keep your balance sheet clean and be able to give us financial statements. Depending on the level of complexity, we may need you to have a bookkeeper, a staff accountant, a controller, etc., in order just to get those financial statements because there's complexity. Or if you're a smaller business, that might be one company, outsourced company. So this is my overview of bookkeeping. I'm going to end on one thing that I think is helpful when people are asking like in-source, outsource, should I hire a full-time bookkeeper? Should I not? I highly recommend hiring an outsourced bookkeeper for as long as possible. And there's one particular reason, there's a lot of reasons, but my one reason, if I had to narrow it down, is fraud prevention. When you have these outsourced finance teams, one, they're less incentivized to do anything shady because they're outsourced and they're employees and they're doing their jobs and they're not like, what can I get from this company? And two, there's controls in place, right? So some people get nervous with bookkeeping. They're like, oh, they're going to see my bank accounts, or they're going to get access to this or that. There's actually bookkeeping accountant access to a lot of business bank accounts because they can't actually do any money transactions. That's great. Like that's good for you. Our team does not get any access to bank accounts. In fact, I think it's happened once or twice. And I'm like, please don't give me access to any bank accounts. We can't transfer money. We're not here to do that. And the primary reason is because then there's checks and balances in place. And we're like, hey, if we can see anything funky going on, we can raise it up. And it's not to say that everyone's going to come and steal from you. I actually don't think most people intentionally go and steal from businesses. I think that people unintentionally do things and then it becomes easy and then they keep doing it, not really thinking of it as a criminal activity. But it can destroy your business. And so I come from that. I don't have a story of fraud. Like I've not dealt with it. I would say that our clients that are potential clients that are committing fraud typically are like, yeah, we're not going to do that because we know we don't want anybody to see it. So we've not actually uncovered fraud, but I think that it's because we've built these teams in place in a way that there's no incentive. And when you don't have an incentive, you're not going to accidentally do anything and you're not going to see anything. And so that's my big kind of push. If you're like in between this in-sourced, outsourced, I would do outsourced bookkeeping all day long, outsourced payroll. APAR, I think, is one where, again, that's the level of complexity required. I don't have any APAR. Like, there's no reason for me to do it outsourced. We have everything is on auto pay. I have to occasionally do a couple hourly clients. It takes me 10 minutes a month. That's not a big deal. And there's no crazy tracking. But if there is, I think those are things to kind of consider. How do you build this in a way that protects you financially? Because that's a big part of building that financial foundation. And then the other reason that I would push for an outsourced bookkeeping firm versus in-sourced is because they know what they're doing and they're training their employees to know what they're doing and they build the processes and systems around it. So you're not just paying for that hourly work. Like, yeah, you could get someone $30 an hour super cheap, or you can hire in the Philippines for $15 an hour. And there's some really great people. So if you want to manage it, but then you have to manage and you have to know what good looks like. And they may not be doing a great job and you may not know. Whereas when you have a firm, there's a lot of other places that you can go to like ask for help if it doesn't look like it's working. And they're actively training their team to do a good job for the most part. Not always. I think I've seen both sides, but those are kind of my 2 points to land on if you're considering like, oh, do I need an in-sourced, outsourced bookkeeper? What does good look like? I think those are really important. So again, bookkeeping, that's my to-do about bookkeeping. Thanks for watching. If you liked this video, please like, subscribe, share with a friend, and comment below. And I will see you next time.